Hi, this is Vijay Bandani here, and I'm here to share some good news with you and also lay out a roadmap as to how to make money out of this. You see, recently SEBI permitted the exchanges to allow weekly and monthly contracts on a new index called the NSE Financial Services Index. As you are aware, financial sector services constitute approximately 35% of the weightage in the NSE 500 index. And financial sector services stocks are the first to react to any kind of economic news or announcements, because the financial markets are the early movers which react to financial news. So it makes sense to have an index that caters purely to financial sector services. Now, the tone and tenor of this index will mimic more towards the Bank Nifty rather than the Nifty 50, because it's a financial sector service index naturally, and it will comprise banking stocks. But it doesn't stop at banking. There are NBFCs and financial companies that are in this index, and this index to that extent is slightly more broad-based as compared to the Bank Nifty. First of all, the Bank Nifty is only of banking stocks, and that too 12 of them, 2 of them being so insignificantly weighted. The weightage is so small that they are almost not counted. The Financial Sector Services Index will have 20 stocks which will make up the index, and like I said, it will mimic the Bank Nifty more than the Nifty 50, and therefore it will give you a big bang for your buck. This index will be launched on 11th of January 2020. That's not too far from now, and it will have weekly as well as monthly contracts. It will have 3 contracts of varying expiries of monthly tenure. So exactly like the Nifty and the Bank Nifty, you'll have the current month, the mid-month and the far month futures, and weekly contracts in addition to those. So it's giving you a wider diversification as far as index trading is concerned. And believe me when I tell you this, the indices constitute 4/5 of the F&O turnover on the NSE, if not more. So we are likely to have one more tradable instrument available to us very shortly. And for those of you who are inclined towards knowing the specifics, I've compiled some data which will help you understand this index in a very brief video format that I'm presenting here. Now, the range and the impact cost. By range, I mean how much it will gyrate intraday, how much it will go from up to down. In percentage terms, the intraday movement is likely to be more towards the Bank Nifty rather than the Nifty 50, which is approximately 1.75 to 1.8% intraday. The impact cost. Now, the impact cost is nothing but when you open the snapshot window by highlighting any stock and clicking on F5, you get the top 5 buyers and the top 5 sellers. Now, if you wanted to buy and sell in very large quantities, you would have to give basically a take buy or a hit sell. So the difference between the first price and the second price is called the impact cost. Naturally, the lower the impact cost, the more efficient the instrument. So the impact cost of this Financial Sector Services Index will be more towards the Bank Nifty, which is a little higher than the Nifty 50, and therefore it will be a little more expensive to trade. And the constituents, I'm not listing all of them, but I'm just giving you the top heavily weighted constituents out there. You will instantly realize that this reminds you of the Nifty Bank Index. HDFC Bank is the top constituent, exactly like the Nifty and the Bank Nifty, with a weightage of 27.13% in this new index. HDFC Limited will be 17.51%, ICICI Bank 14.14%, Kotak Bank will be 12.10%, Axis Bank 6.46%, Bajaj Finance 5.64%, SBI will be 4.06%. Now these are the top 7 weighted counters in the new index. There are 13 more, but their weightage keeps progressively falling. So I've omitted the lower weighted stocks. If you were to basically keep in touch or watch these 7 stocks, you will know which way this index is headed on an intraday basis. And I've already told you that this index has a greater correlation with the Bank Nifty rather than the Nifty 50. So it will on an intraday basis have a range of 1.7 to 1.8%. For those of my viewers of my videos who are statistically inclined and who read my posts on Equity Masters Telegram channel every evening, which I put up Monday to Friday, I would strongly suggest, if you haven't yet joined Equity Masters Telegram channel, to please subscribe to it. It goes by the handle Equity Master Official on Telegram, and you will basically see a lot of statistical output from me every evening. So for those of my viewers who are statistically inclined, let me give you a little bit more data on what to expect from this index. Compared to the Nifty, the beta, the statistical beta, which means the intraday volatility of this index, is likely to be 1.23 as compared to the Nifty 50, which means if the Nifty was to move by 1%, this index will move 1.23%. Now, the look back period taken is 1 year. So on a 1 year basis, the beta is 1.23. If you take a slightly longer time, 5 years, then the beta is 1.20. So it's safe to assume that the beta will range between 1.2 to 1.25. Obviously, this index is a little more volatile than the Nifty. To be precise, 20 to 25% more volatile, because 1:1 is equal. Now, the correlation coefficient. Now, correlation coefficient is something that statistical traders and system-based traders who design their own statistical models, and I just told you about Equity Masters Telegram channel. I put up the content out there in the evenings, which is based on statistical models. So we also take into account this aspect. So the correlation of this index with the Nifty 50, which means if one index is going in one direction, how many times does the other index go in the same direction? So where the Nifty Financial Sector Services Index is concerned, it has a 1 year basis correlation with the Nifty of 0.94. Which means if the Nifty has gone up or down 100 times, this index has gone in the same direction of the Nifty 94 times. This is on a 1 year basis. On a 5 year basis, it is 0.92. Remember, this is a hypothetical study because they have back tested this data without the index being actually launched. The launch date remains on 11th of Jan. These constituents were taken and formed an index, and then this data was back tested in a hypothetical scenario. But the real world results are unlikely to be significantly different from this hypothetical back test. Now the correlation vis-a-vis the Bank Nifty is a little higher. It is 0.98 on a 1 year basis, which means if the Bank Nifty has gone up on 100 occasions, the Nifty Financial Sector Services Index will have gone with the Bank Nifty on 98 occasions, which means it's a lot more easier to trade this index if you just see where the Bank Nifty is going. If the Bank Nifty is looking like it's going to jump significantly, it makes sense to go long on this index at the open. Guess why? Because the constituents, the heavily weighted constituents, are the same. ICICI Bank, Kotak Bank, HDFC Twins, which are of course the most heavily weighted stocks out here, and Axis and SBI. So trade in the direction of the Bank Nifty and you're likely to make good profits in the bank NSE Financial Sector Services Index. As far as the hypothetical returns are concerned, if you were to buy this index 5 years ago, now remember this is a back test only. If you were to buy this index 5 years ago, you would have made 14.99% annualized rate of return, which is significantly higher than your bank FD. I would say the potential in this index exists in an ideal scenario where no other unknown data points come and interfere with the market trends like wars, earthquakes, or other natural or man-made disasters. Then you can get up to 3 times more return by buying and holding this index as compared to your bank fixed deposit. So friends, should everything go right and this index get acceptance from the trading community, which is you and me, we are looking at another addition to our trading basket, and I'm looking forward eagerly to make more money out of the markets by trading this index. On this happy note, I'll bid goodbye to you in this video, not before reminding you to click like on this video if you're watching this on YouTube. Also, subscribe to my YouTube channel if you haven't already done so. Click on the bell icon so you get instant alerts for new videos which we upload here. In the comment section, do let me know what you think of this video and what you would want me to record next. Also, help me reach out to fellow like-minded traders who want a 360-degree worldview on financial markets and knowledge-based investments and trading by referring my video to your family and friends. I hope you take very good care of yourself, your health, your family, your investments and trades. Have a very, very profitable day ahead. Vijay Bambwani signing off for now. Thank you for watching my video. See you again in my next. Bye-bye. Bye-bye. Also, do not forget to subscribe to my free email newsletter, Fast Profits Daily, and get my free guide, How to Trade Markets Like a Pro.